bug out bag, and more. It's the complete survival kit your family needs to ride out natural disasters, civil unrest, or worse. Plus, it makes a great Christmas gift, but it's only available through Black Friday. So head over to mypatriotsupply.com to check out everything that's included. With all the uncertainty in the world, disaster preparedness is more important than ever. Go to mypatriotsupply.com and get prepared today. That's mypatriotsupply.com.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
You're locked into Money Matters Radio, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled Understanding Required Minimum Distributions. Mike, a lot of changes in the RMD landscape. When do people have to take RMDs from either IRAs or Roths?
How old are you?
Me personally?
So this does start changing now. It is currently 73 for a lot of folks. For some younger folks, it's actually now going to be 75 years old for your traditional IRAs and 401ks. And so that started at 70 and a half just a few years ago. And so this is a new set of rules for a lot of people.
When you look at how the penalty situation has evolved, this is one area that's actually gotten a little bit more lenient in recent years. And so that's something where if you are new to RMDs, there are some incentives if you've missed one to get that squared away as soon as possible.
There are, but, key takeaway. Understand these rules and don't miss your required minimum distribution, because there are still penalties for something that, again, is completely avoidable. Yes, the penalties used to be bigger. They are less less stringent now and a bit smaller, but it is still unnecessary extra taxes and fees that you will end up paying if you do miss your required minimum distribution. So get our guide and learn a little bit more about how all of this works.
Folks, the guide is titled Understanding Required Minimum Distributions, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. Again, that number is 800-393-4001, or you can request it online at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and we got a full show to get to, so no time for further introductions. We're going to kick things off with a little bit of chatter about the big meeting between President Trump and President Xi. And this happened, kicked off a little after 10 p.m. Last night. And basically, Mike, when you look at the takeaways on this, and kind of what we've gotten from this meeting, I think it matches my expectations, which was that, hey, not anything game-changing as far as shifting the overall relationship between the two countries. But let's talk about, I think there are 5 key areas that are identified in my book that were addressed here as small side issues that still don't deal with, again, those bigger ones. So number 1, the U.S. agreed to reduce tariffs on Chinese imports by 10%, dropping the total rate from 57% down to 47%.
Agreed. And by the way, if I'm going to call any of the outcomes surprising, to me this was the only one. And it wasn't a huge surprise, but a slight decrease in tariff is...
It was signaled in advance.
Yeah, I guess.
This was being talked about by the president over the weekend, so I'm not too surprised by this. The other side of this is the second item, which is China reportedly agreeing to help crack down on the export of fentanyl and fentanyl precursors to the United States.
Pretty tough to measure, but okay.
Whether they actually do or don't, I don't know that we're going to know, but again, I think it's something that we'd want to see. Does it actually happen? Who knows? Number 2, China agreed to suspend or ease their export controls of rare earth elements for a year. I don't believe this is worth the paper it's not printed on, because we've talked about, we have multiple instances this year of China saying, hey, we're going to, do this rare earth thing, and then they come and have a meeting with the U.S., and they're like, okay, we're not going to. I have no conviction that we're not going to be right back here in January or February.
Let's be clear. We will be if anything sets them off. Right? This would be the first lever that is pulled if there's some other disagreement, and they might pull the lever either way just to get what they want out of it, which, in this case was a meeting with the president where some progress was made on some other issues. So, yeah, I'm with you. I think that any promise on this front, we're back to where we were, I guess, 2 months ago when it comes to rare earths, which is I'm still concerned about the export controls, and they're not going to completely shut them off for the time being.
Other things, China reportedly agreeing to resume larger purchases of U.S. soybeans. Again, this is kind of one where I'll believe it when I see it, and part of the reason on this is we've been talking soybeans for like a decade. I went back, actually, and pulled the references from President Trump's first term, and I can't tell you how many times China pledged to buy more U.S. soybeans and then didn't do it. Now, the difference is right now they've been buying basically none for the last several months.
Yeah.
So, yes, I guess technically anything can be an increase over that, and earlier this week we did see a 180,000-ton order, which is, again, I know 180,000 tons seems like a lot, but when you're trying to buy soybeans for 1.3 billion people, it's really not much. So it's a drop in the bucket. Was that a goodwill gesture before this meeting, or is that something that's going to have further follow-through? We're going to see. We will get data on this over the coming months, and so we're going to see what ends up happening here.
Do we need the government to be open to get that data? Maybe.
I don't know. I don't know who produces it, quite honestly.
Yeah, it's fair.
It's a hard maybe. Other things, just takeaways. I like this quote today. Reporters asked President Trump about the meeting. He says, overall, on a scale from 0 to 10, with 10 being the best, I would say it was a 12.
He did say that. Yep.
So I thought that was just a fun little quote there. But again, I think take this for what it is, which is, by and large, most of the things that were agreed to here were things that that both sides had put in place as potential negotiating items over the last month or two. None of the longer-term stuff was addressed here. We didn't do anything on technology transfers, anything on intellectual property, anything on Taiwan, or anything on semiconductors. The president specifically said that they did not discuss the Blackwell chips from NVIDIA. So I think that when we look at this, ultimately, for me at least, it feels like we're kind of just back to where we were maybe June, July. Is that fair?
I was going to say 2 months ago, so I was even less far back. But yeah, right around then. I mean, the only thing that this has done for me is erased the escalations that we saw in early October.
Yes. It takes that short-term downside risk of things going sideways off the table.
I guess the one piece that is actually measurable and real out of all of this is tariff rates coming down by 10%.
Yep.
That should be immediate, and it probably will be in place for a while, absent an explosion on another issue. Everything else, you kind of have to wait and see. And again, none of the things that were announced really signify any meaningful progress. We didn't even get a TikTok deal, which I thought might be part of this. So it is... I mean, I'm glad the meeting happened. I'm glad we are in this place rather than where we thought we could be a couple weeks ago. But when we said this earlier, we said, look, this all just looks like posturing ahead of the meeting, and it's precisely what we got out of all this, which was posturing ahead of a meeting, both sides, playing up the banter to be able to go to that meeting and walk something away, and they succeeded on that front, I guess. But,
and that's fine. That's fine if you accept it for what it is. If you were hoping for, some grand bargain to change all these different things, it's not there. It's not, and that's because this stuff takes a while, especially when you're dealing with China. And this is the thing I come back to over and over. China loves to just run out the clock. Oh, we're talking. We're still doing the stuff that you don't like. We're talking. Still doing the stuff you don't like. Talking. Still doing the stuff that you don't like. Oh, your presidential term ended. Great, we're still talking, doing the stuff that you don't like.
It is pretty stark, the comparisons that you can draw now between the other piece of this trip that was inked was the deal with South Korea and a negotiated tariff rate on that stuff. It has become clear that China is really one of the only countries really posing a challenge to the president's tariff policy. You could argue Canada to some extent, but not really. I mean, really the only country that's able to stand up and fight back a little bit has been China, and quite frankly, they've been pretty successful in doing so.
Yeah, well, when you say pretty successful in doing so?
When the threat of what the president has wanted from China has been a more open market and investments in the United States. They have not made those like other countries have. And any time that the tariff rates have climbed to a place that would completely be ruinous to China, they have been able to combat that with rare earth restrictions. So there has not been any. Yes, there are much higher tariff rates on China than where we were a year ago.
Sure.
But it's not as though we have convinced Europe to join in on that, Mexico or any other country to join in on it. And any time that we've come close to any sort of real concentrated push there, they have been successful in pushing back on the rare earths.
No, I mean, look, part of it, look, there's a chance that like Europe might be beyond hope on this issue, just because I think that the effective capture of the European Commission by Chinese political pressure I think is pretty significant. And I just wonder if Europe actually has the wherewithal to want to push back against that.
Right.
I just don't know that it's there. I mean, again, Europe's economic engine is German manufacturing, and they've basically said, hey, China, come on in, like do whatever you want for cars and heavy machinery and this and that. I mean, they're basically like kind of killing their own economic engine in doing so, and they don't seem to care. So Europe doesn't really seem to care too much about it. Canada, I'm not sure they care too much either. Canada just in the last week has talked about trying to deepen ties with China as part of this. Quite honestly, there's part of me that, in retrospect, looking at the last week, thinks that is more why the Trump administration wanted to, raise additional tariffs on Canada, as opposed to, I know that, the ad that was going around was talked about, but I do kind of wonder, hey, is it actually because Canada's talking about building closer ties with China? And so, these are things that I think do matter in the context of all these broader negotiations here. Anything else to add before we wrap up with this? I don't think there's too much more that I have to say on it.
No, let's move along from the Asia visit and
let's talk Fed. We got.
Yep.
This is a fun one. This is a meaty one. Let's talk Fed when we return.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Cushing & Dolan know that gifting assets can be one of the most emotional and challenging parts of estate planning. Their new guide, Making the Most of Gifting Assets, can help you learn what to consider before making a major gift, like your primary home or a vacation property, and avoid unintended tax problems. Call 866-848-5699 to get your copy, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Mark Vonner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
Cushing & Dolan want to help you avoid costly mistakes when it comes to gifting assets to your children. Their brand new guide, Making the Most of Gifting Assets, shares crucial strategies to help you protect your legacy and your family. Many people think gifting is always a good thing, but if it's done the wrong way, it can create real headaches. Even well-intentioned gifts can cause complications if your children are dealing with financial pressure or legal issues like a divorce. The guide also explains how a major gift, like a home or vacation property, could come with hidden tax consequences that may impact your entire estate plan. Before you make any big moves, arm yourself with the facts in this new guide from Cushing & Dolan. Call 866-848-5699 right now to get your copy. That's 866-848-5699. Or request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
All right, let's talk a little bit about yesterday's Fed meeting because, quite honestly, I thought this was going to be a pretty boring one. You know, we haven't really been hyping this up. We haven't really been getting all excited about it. But, golly gee willikers, we got a little bit of excitement from Mr. Purple Tie himself.
Yeah, it surprised a little bit.
So, even before Jay started talking, so 2 p.m. we get the release of what the Fed's doing. And no surprise in what they actually did. They cut interest rates, the Fed funds rate, by 0.25%, as expected. They also halted their runoff of the Fed balance sheet, basically saying we've done enough trimming on the balance sheet, and it's now down to the level that we think is appropriate. This is also widely expected based on overall levels of reserves that are out there. When you look at the a lot of people who follow this, they basically said, yeah, the Fed's gotten to an appropriate place, and going too much further could potentially start to create some stress in the banking system. So that was expected. The other part that I personally expected, Stephen Miron, who was nominated to the Fed Board of Governors and is on the Fed Board of Governors for the last 2 meetings now, he dissented to the downside, saying he wanted the Fed to cut by 0.5% in this meeting, just as he did in the prior meeting. So I think that was expected for me as well. I didn't find that to be surprising.
Agreed.
The piece that was surprising, Jeffrey Schmid,
who we talk about all the time on this program, right?
We are
definitely could pick him out of a lineup.
Got to be honest, first time I've ever said or heard the name Jeffrey Schmid in my life. Yeah. Like if I'm being 100% honest, Mike and I follow this stuff pretty closely. I don't think I've ever heard a single thing from Schmidt previously.
Did not know how to spell his name until it was printed.
He is as nondescript as you can get while being on this board. I mean, like the other names we talk about, John Williams, Michelle Bowman, Michael Barr, Lisa Cook, Austin Goolsbee, Philip Jefferson, Alberta Musalem, Christopher Waller. Like these are names that we're familiar with. I see the name Jeffrey Schmidt, and I'm like, who?
Yeah.
Which, again, like relative anonymity on the Fed board is kind of unique. He dissented to the opposite side and said, no, I prefer no change to the federal funds rate. So we got dissents in each direction, which it's not the first time this has ever happened. You
First time in 6 years.
It is, but there's if you look at the last 50 years or so, there's about 10 or 11 instances. So this is something that does happen.
Mm-hmm.
Generally, every 5 to 6 years. It's not. I saw someone yesterday being like, "Oh, this means Powell's lost control of his committee." No, this has happened at Fed meetings on a regular basis. Again, not every year, but usually every 5 or 6, you get something like this that pops up. So I thought that was interesting. And then it was topped off with Powell coming out in no uncertain words saying, hey, don't think that the December cut is a foregone conclusion. And he really tried to push on this. And so what you've had since yesterday is the bond market has gotten the message loud and clear. The 10-year Treasury up about 10 basis points during that time. Mortgage rates have gotten the message. The average 30-year fixed-rate mortgage, according to Mortgage News Daily yesterday, went from 6.13% to 6.27%. So pretty substantial move on that side. And so I think that when you look at this, the bond market is hearing loud and clear, okay, you're doing these couple of cuts because you think it's important to do so, but you're not convinced that there's further weakness that warrants additional cuts. And this was made clear in the Fed's statement as well. One of the things that was interesting here is, again, you always look at little changes that get made in the Fed press release.
Yep.
The last sentence of the second paragraph. And I know people listening are like, Chuck, why do you care about this? And I care because it helps to inform the thinking about what they're doing. We parse each of these words when they make changes because they make changes for a reason. The committee is attentive to the risks on both sides of its dual mandate and judges that the downside risks to employment rose in recent months. Rose is the piece that stands out. The previous statement says have risen. Have risen is kind of, present. It's a combination of present tense and past.
Yep.
Yeah, these risks have risen. Rose is that happened in the past.
We don't know if it's still happening.
Correct. And that's a notable change because it helps to inform how they may adjust policy in the future. So just that change from have risen to rose, that to me is indicative of their thinking as well, even beyond, what we saw with that dissent and what Powell said.
All right, so a few things just contextualize this all for the average person. We already did the context of the mortgage rates. Mortgage rates moved higher on this news. The chance of a rate cut in December moved lower on this press conference. Stocks moved slightly lower during the press conference from what I saw, Chuck. I was trying to measure it, maybe 0.4% downside on the S&P 500 during the press conference and Q&A. Yep. Other things. I'll be surprised if the president does not have a statement to be made about Jay Powell and his failure at the Fed and the fact that he needs to see interest rates coming lower and that they're missing the point here. I'll be very surprised if we don't have commentary from the president on that subject. And, he was asked a bunch of other things, but I think the only other real interesting piece to me, they are clearly... One, they're clearly lacking data on jobs, and so have a lot of questions there. They were also asked some stuff about artificial intelligence, and so I think, one, that speaks to the fact that reporters and probably the Fed are interested in the level of the stock market, the increase in the stock market, the spending coming from AI. But the quote on AI that he had was, I don't think interest rates are an important part of the AI of the data center story. It's not really about 25 basis points here or there. I think he's right about that. Companies are going to spend money on artificial intelligence regardless of whether interest rates are where they are now or 25 basis points higher or lower. And I think they're cognizant of the fact that there is some pretty rapid spending and some pretty wild lending going on out there. And they could be just missing the point here on the labor market that, the weakness might not be that important to the overall state of the economy.
Yeah, I think that is those are all, I think, takeaways from what Powell said. I was interested that he actually engaged on the topic of AI.
Yeah,
I didn't think he wanted to get that granular, and quite honestly, on a few topics, he got more granular than he has in the past, which I thought was interesting. Like, a lot of times, he's like, "Well, we're not going to get into the nuance and this and that." And this Q&A, he was kind of like digging into a lot of different topics, which I thought was kind of interesting. It was kind of a different approach from him.
Senioritis.
Quick break here. When we return, we got Wall Street Watch, and then we're going to get into those tech earnings.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Sometimes we know it's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Hi, guys.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. Cushing & Dolan know that gifting assets can be one of the most emotional and challenging parts of estate planning. Their new guide, Making the Most of Gifting Assets, can help you learn what to consider before making a major gift, like your primary home or a vacation property, and avoid unintended tax problems. Call 866-848-5699 to get your copy, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. If you're approaching your 70s, you might be thinking about slowing it down, but the IRS is just getting started. Required minimum distributions, or RMDs, kick in starting at age 73. And if you were born in 1960 or later, that number jumps to 75. RMDs are more than just a box to check. They can impact your taxes, your income plan, and even what you leave to your heirs. If not done properly, it could mean big penalties, but getting them right might help keep your money working for you. Our latest guide, Understanding RMDs, breaks down how they work, when to take them, and strategies that may make them less of a tax headache and more of a financial opportunity. Request your copy today by calling 800-393-4001 or by visiting ArmstrongAdvisory.com. That number again is 800-393-4001 or ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan, with their master's in taxation. And today we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, it's a very big difference, right? These irrevocable trusts that we do for Medicaid purposes, first and foremost, are incomplete gifts. So you're not actually making a gift at all when you put it into these trusts. But if you give it to a child, now you've made a completed gift. So, for example, if I gave away my house, and people do it, right? You are giving away the built-in gain in that house. you now don't have any control over the house. You can't sell it and buy another one if you want to move. You need the kids' permission for all of that. Plus, if you never sell it and you die, you've trapped the built-in gain for the kids. When they go to sell it, they're going to have to pay capital gains tax. Whereas if you keep it, you can control it, get a step-up in basis for the kids when they die, and still protect it from the nursing home through the trust. Either way, it's going to take 5 years. But gifting isn't always the answer.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy on their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, on one of Wall Street's busiest days of the year, markets are in mixed territory as investors react to the year-long trade truce between the U.S. and China, comments from Fed Chairman Jerome Powell about future rate cuts, and of course, big tech earnings from Alphabet, Microsoft, and Meta. Right now, the Dow is up by just over 0.5% or 260 points higher. S&P 500 is down 0.3% or 25 points lower. NASDAQ is selling off nearly 1% or 222 points. Russell 2000 is edging higher, up about 0.1%. 10-year Treasury yield up 3 basis points at 4.089%. And crude oil down about 0.6%, trading right around $60 a barrel. Alphabet shares up over 5% after the search giant posted strong third quarter results driven by revenue from Google Cloud and YouTube advertising. Microsoft beat quarterly expectations where revenue from its Azure cloud business jumped 40%. The company's finance chief did note that capital spending will accelerate this fiscal year. Microsoft is down by 2%. Meta shares plunging 11% after the Facebook parent reported stronger than expected third quarter earnings and revenue. However, Meta raised its capital expenditures outlook to invest more in AI. Apple and Amazon are on deck to report their results after the close today. Outside of big tech, Eli Lilly shares are up modestly after the drug maker beat quarterly earnings and revenue forecasts and hiked its full-year revenue outlook due to strong demand for its weight loss drugs. Meanwhile, Starbucks posted weaker than expected earnings but posted same-store sales growth for the first time in nearly 2 years. That stock is up over 1%. Chipotle sinking 17% after the burrito chain posted a drop in net income. While its quarterly revenue missed estimates, the restaurant group cited economic strains were turning customers away from its stores. And Carvana stock is falling 9% after the online used car retailer beat quarterly revenue expectations. However, its net income fell well short of street forecasts. I'm Tucker Silva, and that is Wall Street Watch. And the Financial Exchange streams every day live on YouTube. Subscribe to our page, hit that bell, and follow market activity all morning long, only here on the Financial Exchange Radio Network.
All right, so yesterday we did get the quarterly earnings for, as Tucker mentioned, we had Meta, we had Microsoft, we had Alphabet. Only one of these companies uses its original name anymore, and I don't know what that means, but it means something. Where do you want to start, Mike? Which one?
I'm trying to think if there's anything that
Alphabet.
What if there's anything we can generalize about all three of them? All three of them dramatically
Tucker
grew
said Alphabet.
Both revenue and
Alphabet
profits other than taxes. Let's start with Alphabet.
What would you like to start on, Tucker? What about Alphabet?
It starts with the letter A.
Okay, wonderful. So here's the big thing. So Alphabet, if you look at their core search business, the concern this year was, hey, more people are using large language models like ChatGPT in order to, get information. One of the biggest use cases that these large language models have is looking for information, as opposed to going to Google and saying, hey, how do I make a burrito? You type it into ChatGPT, and it gives you, the step-by-step instructions that way. What we saw was actually an acceleration on Google's core search business, and so the idea that Google's this dinosaur whose business is dying, not in evidence right now, Michael.
Yeah, they are spending dramatically, but compared to Meta and Microsoft, Alphabet, Google, whatever you want to call them, they more than covered their CapEx expense with their free cash flow. And so, yes, they're spending a boatload of money. They are, trying to capitalize on AI. But the pace of their revenue growth is so strong that it's at least covering all this increase in expense and by no means turning into a dinosaur, I think.
No, and so if you look at the numbers here, and again, just pulling them up and saying, okay, what did we actually see? I want to talk about that free cash flow piece just for a moment.
Yep.
Okay, because this is something that does matter, and I think it's going to be important to watch how it develops, because for the previous 2 quarters, what we did see was declining free cash flow. Okay, Q4 of 2024, again, I don't like to dig into earnings reports a ton, but we're getting to the point now where some of these numbers are big enough that it warrants some discussion. From Q4 of last year through Q2 of this year, free cash flow on a quarterly basis went from $24 billion down to $5 billion. So you look at that and you're like, okay, that's not really a friendly trend that you want to see. That's not really ideal on that front. So you kind of dig in and you say, okay, what's the reason why that was happening? And, is there anything there that changed during this quarter, that might have been, fundamentally different from the trend that we were seeing previously? Is there any reason why they saw this big jump in, overall operating income before you even get to the free cash flow piece? And you kind of go through and you're like, okay, as you're looking through the numbers, there's nothing huge that necessarily stands out until you start looking at, hey, where you look at their cash flow statement and you're like, okay, where is the difference there? And there's some shift. One of the things, and again, I don't want to get too technical on it, but you did see a fairly notable shift in terms of accrued expenses and liabilities. So basically it was okay, they paid off a bunch of stuff that they hadn't. But ultimately, I think that when you look at this, it does seem to be something that at least for now is sustainable, because their core business is growing at the rate that it's growing at.
Yeah, I mean, their revenue's up 16% year over year, and that was the weakest of the 3.
If that changes, then you get into the situation that Meta is in, which is, and look, Meta kind of ended up with, they kind of had a double whammy. Even before this quarter, they were seeing a decline in their cash on hand. So if you look at where Meta was at the end of last year, they had $78 billion in cash on hand. Before this quarter, that was down to $47 billion. After this quarter, they're down to about $11 billion in cash on hand. So they've been spending from their cash pile in order to fund this. Now, part of this quarter was they had a big $18 billion tax expense that they ended up getting hit with.
Right.
That they said will help their tax situation going forward. Okay, that's not going to repeat itself. But then they came out today and said, hey, we're going to do a $25 billion debt raise in order to help finance some of this construction. And I think that's part of the reason why the market's a little spooked here is they're like, well, if you guys can cover this out of free cash flow, that's all well and good. But if you start having to raise debt in order to pay for data centers that were unclear if they're going to be profitable or not, I don't really know about that. And so that's why Google, when you look at them, or Alphabet rather, their stock's still up 5% today. Meta's down 12. I think that is the key difference. And Microsoft's kind of fluttering in the middle. They're down about 2 just because their quarter was good but not great. It was just fine.
I wonder what it cost Meta to borrow.
I'm guessing it's probably, I could probably pull up some bonds if we wanted to look at it, but my guess would be, just looking at spreads and where Meta's credit rating is. Let's see, I'm just pulling up where these spreads are right now. I'm guessing, and part of this, Meta is, they're doing, it's a 6 tranche issuance, anywhere from 5 to 40 years, I believe it is. I'm guessing Meta's, if you're looking at that 40-year bond, it's probably 5%-ish, and the short-term ones are probably somewhere in the range of 4. So it's probably like an average interest payment of like 4.5 on that.
Well, I fully recognize that none of us had any idea how much money we would be spending on or companies would be spending on artificial intelligence development 4 years ago. You really sit back and wonder, man, how much money could they have saved if they just went on a borrowing spree? Kind of like, didn't Apple do that in 2020 and 2021? Just borrow a ton of money even though they didn't really have any need for it?
Yeah, the piece that is going to matter on this, and you're starting to see it, like I was looking at Meta's financial statements, which, again, like I don't do this often, but when a big stock like this moves in this way, I'm kind of like, okay, like what's going on here? The piece that you're going to have to watch on this is the depreciation line item of these assets, because effectively, like, that is going to end up impacting cash flows. Like, it goes right onto the cash flow statement. And so the problem that you're going to potentially run into is you're doing $70 billion in CapEx this year. If you say, okay, there's, a 10-year useful life of that asset that we just built, you start depreciating it at a, $7 billion a year clip, and then you're doing that next year again. Remember, you're adding another like $70, $80 billion on top of that. All of a sudden, you start getting into that free cash flow at a pretty good rate. And this is the concern, because remember, just because you build the data center doesn't mean the cost is gone. That's why you have depreciation. It's the realization of, hey, we're going to have to buy new chips in a few years for that data center. We're going to have to buy new cooling systems in 5 years for that data center. And so that is a cost that is going to end up coming through. Again, it's not just a one-time expense. It's why depreciation exists here. And ultimately, the question then is, okay, if you're going to have these expenses that come up on a regular basis and have this depreciation, are you going to be able to generate the revenue to cover it? That is the question that's going to start to matter in the next year or two because of the scale of it.
One more point on this before we go to break. What was Meta's predicted CapEx now on all of this over the next year?
$70 billion. It was $70 billion this year, and their guidance next year, I can't find offhand right now.
I would want to give this some scale comparison for a moment here. The last few years, all we've been talking about with Meta was the metaverse, right? Pouring money into the metaverse that saw no real return on it and a fair bit of criticism. The total amount invested into the metaverse between 2019 and early 2024 was around $45 billion. The scale of this stuff is ridiculous. It is massive, and clearly they're doing it because they see the promise of something in the future, but it's important to just understand they're talking about annual spending that has well eclipsed anything that they've poured into anything before.
Well, and the incentives on this make sense. Like, if you think about it this way, if you are Meta and you say, look, we can spend over a 3 to 5 year period, $200 to $250 billion, and the upside is that we achieve everything we wanted there and we unlock, $1 trillion in annual revenue as a result of it, I get it. Like you're totally incentivized to do so.
Yep.
The downside for Meta is, hey, if it goes badly, Mike, is Meta going to go out of business because of this?
No.
Probably not.
No, likely not.
Probably not.
But a very long hit to profitability to pay those loans back.
But like, if you are the manager of that company, if you are the CEO of that company, the financial incentives are, yeah, we're going to do this. Because the upside is so great. And like this is how CEOs make decisions all the time. Like no one in the CEO chair ever knows for certain that something is going to pan out. It's what's the upside and what's my downside. Whether it's an acquisition, a new product development, whatever it might be. So if Meta says, yeah, we're going to spend, $250 billion in the next 5 years, and the upside for us is it might unlock $1 trillion annual revenue stream that can cover that and more. Okay, sure. What's the downside?
Right.
Well, your stock price could be cut by like 50 to 75% if it doesn't work. Okay, like Zuck's going to take... Mark Zuckerberg is not a a stranger to long shot bets. Facebook's a long shot bet, right?
Yeah.
Like this is what he's built to do is try to make these bets. They're larger than when he was in his dorm room starting the thing up. But ultimately it was I think I can make something here, and I don't know if he's going to be able to or not. But I understand the financial incentives and why they're doing this. It's just the nature of risk is sometimes it doesn't work, and we don't know yet if it's going to work or not. Let's take a quick break here. When we come back, I want to talk a little bit more on the tech earnings side, and then we'll get into what's going on in Massachusetts with families trying to raise children. How much income do you actually need to do so in the most expensive state in the nation to raise kids?
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Turning 70 isn't just another birthday. It's when the clock starts ticking on your retirement withdrawals. At age 73 or at age 75 if you were born in 1960 or later, you need to start withdrawing money from your IRA. They're called required minimum distributions, and missing one can mean big penalties. Taking the RMDs at the wrong time can also spike your tax bill. Even the type of account matters, since your IRA and 401k follow different rules, which could get confusing fast. Our new guide is called Understanding Required Minimum Distributions. It breaks the process down in simple terms so you know when to start, how much to take, and ways to manage the tax impact. Request your copy today by calling 800-393-4001. That's 800-393-4001 or ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping and the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com. Cushing & Dolan want to help you avoid costly mistakes when it comes to gifting assets to your children. Their brand new guide, Making the Most of Gifting Assets, shares crucial strategies to help you protect your legacy and your family. Many people think gifting is always a good thing, but if it's done the wrong way, it can create real headaches. Even well-intentioned gifts can cause complications if your children are dealing with financial pressure or legal issues like a divorce. The guide also explains how a major gift, like a home or vacation property, could come with hidden tax consequences that may impact your entire estate plan. Before you make any big moves, arm yourself with the facts in this new guide from Cushing & Dolan. Call 866-848-5699 right now to get your copy. That's 866-848-5699. Or request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Just putting a bow on the tech stuff. Based on the continued increase in CapEx and when this is going to start really showing up on companies' financial statements, 26 and 27, I think, are key years for these companies to prove not just that artificial intelligence works, but that they can actually monetize it and generate revenue. Otherwise, that additional CapEx, when it starts coming back in the form of depreciation, it's going to become a problem for cash flows and earnings. It's just not going to be something that's sustainable if they don't have the revenues there. And the next 2 years, in my opinion, are the years where it's going to be make or break for, yes, we can make this work, or no, we can't.
Yeah, and my concern there is not that they will all be failures on that front, but that they probably all won't be winners.
The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences have put the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping in the world-famous Magens Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visit usvi.com.
Piece of the Boston Globe headline is $100,000 salary enough to raise a family in Massachusetts. For some local parents, it isn't. And Massachusetts, according to this study that was done by Smart Asset, has the highest annual cost of raising a child in the nation at $35,841. This compares to Mississippi at the lowest at about $16,000. Nationally, most states fall somewhere around $20,000 a year. That's looking at, cost of child care, clothing, food, all the stuff that you typically need. And obviously this is exacerbated by the fact that prices have continued to move up on a number of key items related to raising a child this year.
Child care, though. I mean, child care in Massachusetts.
That's the biggest one, yeah.
$22,000 a year last year, and that's the median annual cost, right? If you live anywhere around 128, greater Boston region, you're looking at quite a bit more than that. And that's probably, again, median annual. That's not full-time daycare. And so, yeah, I have had conversations with families where it's like, yeah, unless you are making over $100,000, it doesn't even make sense to put your kid in childcare, given how much it costs these days.
Yeah, and so part of this story, it covers lots of people that left good-paying jobs because they said, hey, ultimately, if I'm paying for childcare, I'm still going to be at a net loss there. It's cheaper for me to stay home and raise the kids that way. Let's take a quick break here. When we come back, we got hour 2 coming up on the Financial Exchange.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of of your medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping in the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all 3 and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Required Minimum Distributions. Mike, one area with some big changes the last couple of years has been RMDs as it relates to inherited IRAs. What is the lay of the land today?
Yeah, so critical things that you need to know is that for most inheritors that are not spouses, so that's your starting point. If you are not married to the person who passed away, you are most likely subject to a out in 10 rule. What has also changed is that you're required to satisfy two different rules for most folks. Again, you are required to empty that inherited IRA within a decade. You also have annual required minimum distributions based on life expectancy. So it is really complicated now for inheritors.
How does that potentially influence how a parent may leave assets to surviving children in terms of taking their incomes into account?
Yeah, well, I mean, look, it is going to concentrate this additional income in a decade time period after you're gone. And so it adds a little bit of complexity in terms of that estate planning, right? Maybe I've got two kids. One's a very high income earner. One is a little bit lower. Do I potentially reshape my beneficiaries so that they both receive the same amount, maybe after taxes? A lot of complex planning you can do there.
The guide this month is titled Understanding Required Minimum Distributions. The two ways that you can request it are by calling 800-393-4001 or by visiting armstrongadvisory.com. Again, that number is 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck Mike Tucker with you here today, and if you liked the first 3 days of this week, you probably don't like this one. It's the first 3 days, what we had, small number of stocks, predominantly the big tech stocks, roaring ahead, and a lot of other stocks in the S&P 500 and NASDAQ kind of lagging behind. Breadth, as it's called, was very, very weak. In fact, I forget which day it was either Monday or Tuesday, we had the worst day since 1990 in terms of breadth where stocks still went up. There were over 290 more stocks that traded down than up on one of those days. Again, I can't remember if it was Monday or Tuesday. and yet we still finished positive. That is the worst breadth performance for a positive S&P 500 day since 1990. Today, on the other hand, you've got the S&P down 22 points right now, about 1/3%. But at the moment, you've got 233 stocks up, 233 more stocks up than down. And so what's dragging the index? It is big tech. It is Meta down 12%, Oracle down 4%, Broadcom down 3%, AMD down 3%, Microsoft down 3%, Nvidia down 2%. And so because of the big, weighting in the S&P 500, those stocks being down outweighs the fact that Bank of America's up 1.5%, Starbucks is up 1.5%, Marriott's up 1.2%, Walmart's up, 1%. That's still just not enough to drag the index higher. So the Dow is up 336 points, S&P is down 21, NASDAQ Composite down 226. When we take a look at the bond market, still a modest sell-off happening there after Jay Powell told folks yesterday, hey, all you that thought it was a given that we're going to cut again in December, I don't know if we're going to do that. So the 10-year Treasury is up 2.9 basis points to 4.087. Mortgage rates have responded as well. 30-year fixed-rate mortgage, according to Mortgage News Daily, has moved from 6.13% to 6.27%, so more than 1/8% jump yesterday there. Gold not seeing a ton of volatility. It is up $7.20 an ounce at $4,007.20. And we've got crude oil, West Texas Intermediate, down 3 cents a barrel to $60.45. So not much movement on that side. Big reason why a lot of those tech stocks are moving. We had 3 big earnings reports yesterday with Microsoft, Meta, and Alphabet. Today, we're going to have Apple and Amazon after the bell. We'll talk about them in just a minute, but we're going to kick things off this hour with a piece from Axios titled, "The Job Market May Be at a Tipping Point." This from Neil Irwin. Did Neil used to be Wall Street Journal, or was he New York Times?
I think he was New York Times, yeah.
New York Times? So he's with Axios now. Mike, what is this tipping point that we are hearing about? What's the tip?
The same one that we've been talking about now for months, which is that the pace of hiring has dramatically slowed. There are not as many job openings as there were for the last several years. The labor market appears to be better in balance. The same things that the Fed has talked about. The tipping point would be, do you continue this trend? Because the trend has been fewer companies hiring, not huge layoffs, but some here and there. We've had 2 big announcements just this week. And so were you to follow the trend line, you would expect unemployment to rise. You would expect the state of hiring to continue to be weaker. But look, we've had several of these moments where we get to this kind of uncomfortable level. One of them was last summer when we were talking about the Psalm rule all the time. Unemployment rate was moving up. We talked about it. Usually the unemployment rate doesn't start moving up and then just stop there. It did. It paused and kind of settled into a level that we are similarly at now. And so that is the potential tipping point, is do we head further in this direction where companies feel under pressure and reduce their workforce, or are we just reaching a new equilibrium? And it is, well, frankly, if the Fed doesn't know, then I'm not willing to say that I have any definitive idea.
No, I mean, look, the Fed has access to better data and they have better contacts than you and I do. And so, yeah, I think that's a fair place to be. The question on this, and Mark and I talked about this a little bit yesterday, you've got some companies, Amazon, just as an example, announced that they were going to be laying off 14,000 to 30,000 people as part of a restructuring that they're doing.
Yep.
And one of the things that I think is interesting to think about is the context of labor supply and demand over time, and how it's similar to the housing market in this respect, in that one of the things I wonder about are the people that are being laid off now, the extra workers that were hired in 21 and 22 when these companies thought they really had to staff up. And remember how competitive it was for workers then?
Sure do.
It was absolutely crazy. And so some of the compensation packages were just nuts. And part of what I wonder now is, hey, is this kind of time arbitrage from these companies where they say, yeah, we're going to fire these workers that were brought on in 22 and 21 with these crazy comp packages, and then we're going to let things sit for 6 months, and the labor market isn't as robust now, and if we need to bring someone else on, we can do it with a far less competitive pay package today than was required with that person that we're letting go now.
Right. Yeah, you do wonder, like, how... I wonder if I can pull this. So UPS this week announced, 48,000 job cuts. How much did they have to ramp up back during 2020 when we were all sitting on our couches and ordering everything that we had in our homes online?
Yeah.
Like, maybe this is just a return to normalization on the labor force, but I'll actually look it up after the next break. But I don't know which direction we're headed on all this. And the Fed is admitting the same. Look, we could be heading towards a much weaker labor market, or this just could be a normalization after a very strange few years and a come down from the sugar high.
The counter to this is typically consumer spending leads hiring or layoffs. We have still not seen any meaningful shift in consumer spending in the aggregate. You are seeing where it's going, moving around, but we're still running 4 to 6% year over year in consumer spending.
Yep.
Remember, 3% of that's inflation, so it's like 1 to 3% real spending growth. And until that changes, it's tough for me to see layoffs happening because companies don't just sit around and say, let's lay people off. You know, like they do it because they don't have the demand and they want to maintain margins. So demand leads hiring or layoffs. To this point, we haven't seen a meaningful broad-based shift in demand.
Right.
Quick break here. When we come back, we got Michael Santoli from CNBC joining us. We're going to do some trivia as well. That is coming up after the break.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Mark became familiar with after his military service ended back in 1984. As Mark built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Mark works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Mark Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping and the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Required minimum distributions, or RMDs, may seem simple, but there's a lot more to them than just taking money out of your IRA. RMDs impact how much you pay in taxes, and they can push your income into higher brackets. And if you miss one, the penalties can be steep. They also affect how much your heirs actually get to keep, which makes timing and strategy crucial. If you have multiple accounts, it's important to know which ones you can combine and which ones you can't in order to help you avoid costly mistakes. Our new guide, Understanding Understanding RMDs shows you how to navigate the rules, limit your tax burden, and plan ahead for your legacy. Request your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Looking for a getaway that's easy, warm, and unforgettable? Discover the magic of the U.S. Virgin Islands, St. Croix, St. Thomas, and St. John. Just a short flight from New England with no passport needed and no money to exchange. Soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your fall escape now at visitusvi.com. That's visit usvi.com.
As promised, we are now joined by Michael Santoli from CNBC here to talk about what is going on in markets. Michael, thank you so much for joining us today.
Oh, glad to do it. Thank you.
Jay Powell yesterday tried to pour a little bit of cold water on the idea of a December cut being a given. What do you make of the market's response to it over the kind of first day or so since then?
Yeah, it's just a little bit of a gut check for just the absolute certainty that the market had priced in about, at least another cut in December, maybe one beyond that. It hasn't had a tremendous effect in terms of where bond yields have gone, but I think it was an interesting injection of doubt into a very certain and somewhat complacent market. In fact, I see it as part of this whole thing we went through in the last 24 hours where, the assumption of, hey, Fed's going to keep cutting rates into a decent economy. You've got AI momentum in all of these tech stock earnings, and then, of course, maybe some progress on trade. Every one of those things, I would argue, came up a little bit short of the bulls' best hopes for the outcomes, or just a recognition that the market had already priced in a lot. When it comes to Powell in particular, I always feel as if the Fed chair wants to preserve a lot of optionality. They don't want to go 6 weeks with the market thinking they know what comes next when you have a lot of things that are going to come in the middle of it. Plus, he's got a divided committee. So he had a dissent for doing nothing, one dissent for making a bigger cut, and I think he has to somewhat give voice to that in his commentary.
I want to talk a little bit more about tech earnings. You mentioned them. What do you make of what we've seen so far, and are we starting to see maybe the first signs that investors may be starting to care about how all this CapEx ends up impacting cash flow and earnings down the road, or is that just my motivated reasoning at play here?
No, you can definitely make the case that we are seeing some of those concerns surface. Now, it wouldn't be the first time, arguably. Alphabet, Google went through this. People were very skeptical that it could make it work, back a year and a half ago, and it came back from that. So now Meta is the source of a lot of the doubt. And I think it makes sense that Meta sort of has a higher burden of proof here. They've really pivoted multiple times in their AI strategy. Nobody's quite sure why they want to build this so huge comprehensive model. Like, why do they need to be a host of an AI LLM or whatever they're going to do? Why can't they just be a beneficiary of the proliferation of AI in their advertising business. And, they're doing it with some debt. They're raising another $25 billion in the corporate bond market today. That'll double their debt. So it's not that old story of, hey, these guys are just kind of using the spare change, their free cash flow, to make these investments. Interestingly, Mark Zuckerberg said that even if this ends up being kind of wasted in the initial effort, we still have the assets. It'll still be worth something for, the business down the road. I'm not sure that's sort of reassuring at this point, given how far the stocks have run. But I do think it shows that these companies are spending out of a sense of compulsion and urgency, and not because because they sort of see the demand in the moment. But it's sort of like we'll figure out exactly what the returns on this are going to be down the road.
We've had kind of a bumpy October, but as we get towards the end of it, you still have indices that have risen meaningfully over the course of the month. A lot of chatter about, hey, this is going to continue as a year-end rally. What ingredients typically need to be present in order for that year-end rally to take shape and actually happen?
I mean, it's kind of glib to say that mostly you just need the calendar to turn to November. I mean, that's not 100% true. There's like 20% of the time when you actually don't have markets up in the latter part of the year. Usually that's not in a year that has not been as strong as this one going into it. I do think you have to make sure, though, that investor sentiment and positioning and speculative activity has not kind of gotten ahead of itself and overshot. And I would argue we've kind of pressed up against that line over the last few weeks. Been a low-quality rally in terms of like junkier, more speculative companies leading. And then in the last few days, when the S&P 500 did finally break out of a 2-week range, which was no big deal, but a 2-week range to a new high, it was very narrow, and it was the semis, and it was the same old Mag 7 stocks. Today, interestingly, you get this sell-off in Meta, you have some pressure on Microsoft, so you have an anti-NASDAQ 100 day, and it is rotating around. You have the average stock in the market up 0.5% in the S&P. So I guess it's trying to make it work and stay on decent footing here. So it's hard to fight the seasonal trends, but I always say it's also, you don't want to defer to it. That can't be the sum total of why,
Sure.
You're interested in stocks here.
So you mentioned that, markets have gotten a little bit exuberant over the last, couple weeks in particular. How do we reconcile that exuberance with, we've been getting layoff announcements here and there. Housing hasn't been particularly strong. We've got labor market concerns. How does all this fit together? Because I know a lot of our listeners are sitting there like, help make this make sense. What are your thoughts on it?
Well, the exuberance is actually in parts of the market that are pretty well removed from the here and now U.S. economy, I think you could argue. So, I'm talking about not just the whole AI food chain, which has got a life of its own, but really long shot bets like quantum computing and, drone technology and all of these things that feel like they're the thing of the future, but they don't have earnings now, so we don't have to worry about the actual economy. I do think that you've seen some evidence, though, within the market of some concern about the pace of growth, right? So consumer cyclical stocks have suffered. You're seeing restaurant stocks get hurt. You're seeing the restaurant companies blame a pullback in spending by certain consumers, younger and those making less than $100,000. That's what Chipotle said today. You're seeing the home builder stocks and housing related really struggle because there's really been no real response to some downticks in mortgage rates. So I think the market is kind of registering those concerns. It's not panicking about them. It's not pricing in, a genuine downturn yet. But those parts of the market did suffer after Powell tried to kind of take away some of the certainty about a December rate cut. So there might be a push-pull there in the story.
Very good. Michael, appreciate the time today. Thank you so much for the information, and we will talk to you soon.
Great. Thank you.
That is Michael Santoli from CNBC talking about what we've been seeing in markets in the last several weeks.
All right, time for trivia here on the Financial Exchange. And for decades, networks aired It's the Great Pumpkin Charlie Brown leading up to Halloween. In 2020, Apple bought the rights to the Charlie Brown specials and ended a 50-plus year run on network television. So our trivia question today, what year did It's the Great Pumpkin Charlie Brown first air? Once again, what year did It's the Great Pumpkin Charlie Brown first air? Be the fifth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com. And want to remind everybody to subscribe to our YouTube page where you find daily interviews like the one you just heard with Michael Santoli of CNBC and full shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network.
Mike, I want to get to previewing Apple earnings in a little bit, but I want to cover one story first just because Tucker tossed it all the way at the end of the stack. And this one I actually wanted to pull up just because I think it's awesome. So it's
potatoes.
Occasionally you see a world that is just completely it's not the potato one.
Okay, I'll get there later then.
Yes. Occasionally you see a world that's just like completely divorced from what you understand, and today I saw that. So apparently in New York City now it is sample sale week, which I didn't even know was a thing. To be honest, I didn't even really know what a sample sale was before today. For those of you wondering, I guess it's a time when high-end like luxury goods retailers put out their new stuff and sell it really cheaply for like a very limited time so that, average people can potentially afford it, but it's very limited supply. So these huge lines develop as a result of it. And, these are people that are, again, like waiting for the ability to potentially buy these things. You're talking like hundreds of people in line here. And there are companies that have started up in New York. Specifically, their job is to stand in line for other people for hours on end.
How much can you make for that?
So there's a guy by the name of Robert Samuel who runs a company called Same Old Line Dudes, and he had 61 clients on opening day for sample sales. Each stander is getting $25 an hour.
Whew.
So you do the math out, okay? And his business is doing $1,500 an hour. If you do that just for a day, it's $36,000 in a day in revenue. Quick break here. We got Trivia Answer next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. If you're approaching your 70s, you might be thinking about slowing it down, but the IRS is just getting started. Required minimum distributions, or RMDs, kick in starting at age 73. And if you were born in 1960 or later, that number jumps to 75. RMDs are more than just a box to check. They can impact your taxes, your income plan, and even what you leave to your heirs. If not done properly, it could mean big penalties, but getting them right might help keep your money working for you. Our latest guide, Understanding RMDs, breaks down how they work, when to take them, and strategies that may make them less of a tax headache and more of a financial opportunity. Request your copy today by calling 800-393-4001 or by visiting ArmstrongAdvisory.com. That number again is 800-393-4001 or ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping and the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Mark became familiar with after his military service ended back in 1984. As Mark built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Mark works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Mark Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about the implications of gifting assets away. Todd, since the estate tax laws are projected to change on January 1st of 2026, significantly reducing the estate tax exemption, does it make sense to gift away assets right now?
You know, it's a big question mark. You have to think of a few things. One, look at the size of your estate. If the exemption falls to $7 million each and you're married, you can still die with $14 million of assets and not have an estate tax. So gifting might not be important from a federal gift tax situation. But the state exemption is only $2 million, so you can only shelter $4 million. So you might want to gift to reduce your state estate tax. However, there's basis to consider. If you give away low basis assets, you're trapping capital gain. And to do that, you might be paying more in capital gains taxes later when the kids sell the assets than you're saving in just Massachusetts estate tax. So you really got to think about whether it makes sense to gift or not. And if you're going to gift, you should probably set up a gifting trust. People might be gifting large assets away and not gift the assets directly to a child. Have them in a trust for the child's benefit and then protect those assets for them.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, in one of Wall Street's busiest days of the year, markets are mixed territories. Investors react to the year-long trade truce between the U.S. and China, comments from Fed Chairman Jerome Powell about future rate cuts, and of course, big tech earnings from Alphabet, Microsoft, and Meta. Right now, the Dow is up by 0.6% or 281 points higher. S&P 500 is down nearly 0.4% or 26 points lower. NASDAQ down nearly 1% or 229 points. Russell 2000 is up about 1/3%. 10-year Treasury yield up 2 basis points at 4.08%. And crude oil is flat, edging higher, trading at $60.52 a barrel. Alphabet jumping by 5% after the search giant posted strong third quarter results driven by revenue from Google Cloud and YouTube advertising. Microsoft beat quarterly expectations where revenue from its Azure cloud business jumped 40%. The company's finance chief did note that capital spending will accelerate this fiscal year. Microsoft down by 3%. Meta shares plunging 12% after the Facebook parent reported stronger than expected third quarter earnings and revenue. However, Meta raised its capital expenditures outlook to invest more in artificial intelligence. Apple and Amazon are on deck later today when they post their results after the closing bell. Outside of big tech, Comcast beat earnings and revenue estimates for the third quarter. However, the company said it lost 104,000 broadband customers the fourth quarter in a row. It failed to grow its broadband subscriber base. Comcast shares are pulling back 3%. Starbucks posted weaker than expected earnings, but posted same-store sales growth for the first time in nearly 2 years. Starbucks is edging higher, and Chipotle is sinking above 15% after the burrito chain posted a drop in net income while its quarterly revenue missed estimates. The restaurant group cited economic strains were turning customers away from its stores. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked the trivia question, what year did It's the Great Pumpkin Charlie Brown first air on TV? That would be 1966. And from North Berwick, Maine is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Ann. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, let's talk a little bit about Apple.
Yeah, let's do that. They stand in pretty stark contrast to me when we talked about Meta earlier, right? Meta feeling this need to invest on the promise of future growth on artificial intelligence, and Apple, I think at least, taking the same lessons out of their previous playbooks, which is we don't need to be first to the market on this.
Yeah, I think the question, I've compared Apple over the last year or so to Toyota, who back in 2021 and 22, when everyone else was getting all EV happy and saying, hey, we're going to make nothing but EVs by 2030, and we're going to just, we're going to turn into EVs because we're not even going to be people anymore. Toyota said, no, we're going to, keep making hybrids and keep making internal combustion engine vehicles, and yeah, we're going to research EVs, and maybe we'll even roll a couple out, but that's not going to be us. And that approach turned out to be right. Apple's kind of been doing that where, look, all the other big tech companies are going to spend $500-600 billion next year trying to build out data centers for artificial intelligence. And Apple's kind of sitting there going, we've got some ideas on AI. Here's a little Apple Intelligence thing on a phone that does bad summaries of emails and conversations, and yeah, we'll get OpenAI to maybe, plug their model into one of our things, but it's not really us. And so I don't think this quarter is going to be justification for that approach. That justification, if it ends up, coming to fruition, is going to be over the next 2 to 3 years when they're proven right or proven wrong. This quarter, the question that has been looming out there is, hey, you raised prices on iPhones. You got questions about demand in China. Are you going to be able to hit those numbers and show that you can still deliver the revenue if you're not, making AI the focus right now?
Yeah, that is the question. And I mentioned, I don't think you were on the program, but my wife has an iPhone. I have a Google phone. And I've noticed, a fairly big difference in the usefulness of the AI-powered assistants between the two of them. But again, I don't think any of that's risen to the point where somebody's about to jump ship and, abandon their family who all uses iPhones to go use a Google phone instead. So it has not reached that crescendo yet, and I really doubt it will in terms of differentiation for Apple versus other products. Folks, it's nearing the end of the month. I want to talk to you about our annual new guide on required minimum distributions. We do put one of these out every year, but the rules have been changing at such a fast pace that we've needed to update it every single year. As we approach year end here, you've got about 60 days left before the year end and the need to satisfy that IRS rule on RMDs. But there's a lot to learn about the subject, and specifically, the IRS has given additional time for folks to satisfy those RMDs. It started at 70.5, it moved to 73. It is now 75 for a lot of people before those RMDs start. But you always, whenever the IRS creates more leniency around a rule, or when Congress really creates that leniency, you always know there's going to be an offset. And there is in this case, too. There's the threat of higher taxes later when you start withdrawing those funds or when you leave those funds to a loved one after you are gone. If you want to learn more about this subject, if you are approaching RMD age, or if you have a parent who's already there and you're trying to understand what the implications will be for you, request our October guide on understanding required minimum distributions. Not only will we explain the rules, but we'll talk about strategies to minimize the tax impact of the RMDs, common approaches such as Roth conversions and donating portions of it to charity. But you need the guide to get started. The number to request it is 800-393-4001. You can also go online, request it there at armstrongadvisory.com. But that phone number, once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Got a couple of earnings reports in the food space today, both with both kind of with a Chipotle twist. Chipotle was one of them, but Starbucks the other. Starbucks now has Brian Niccol, who formerly was the CEO at Chipotle until... When did he take the Starbucks gig? Was it about a year and a half ago?
Yeah, thereabouts.
Do you remember where he was before Chipotle?
Oh, Taco Bell.
Yeah, there we go. Look at that. Full circle to one of my favorites. But so Starbucks up about 1% today. And big thing is global same-store sales up 1% for the quarter. They were expecting to see both global and U.S. ones with marginal declines. And so maybe starting to turn the corner a little bit for Starbucks. I tend to trust Brian Niccol because he just was a fantastic operator both at Taco Bell and Chipotle. So maybe starting to bear some fruit there. Chipotle, on the other hand, they've got all kinds of problems.
Yeah.
Stock's down 15% today. They're now guiding that their same-store sales are going to be down low single digits this year. In February, they thought they were going to be up mid to low single digits. So a big reversal there. Foot traffic down 0.8% for the quarter, the third straight quarter of declines. And in particular, they're saying that consumers making less than $100,000 and between the ages of 25 and 35 are seeing particular challenges. They are not the only ones calling out that age 25 to 35 demo. And so I think there is some meat on that bone that demo is really struggling at the moment.
And to turn that around, you have to deliver value to that consumer. And I don't know how Chipotle does that given what they've built their brand around, which is fresh ingredients and not Taco Bell, frankly.
Here is my advice to Chipotle as someone who has never worked for like a chain food place, chain restaurant.
Got it.
That's the one.
Yep. Food place.
Chain food place is the technical term. Don't devalue your product.
Right.
Y'all remember Quiznos?
Sure.
Best subs out there, like miles better than Subway.
Yeah.
But they decided after they got private equitied and everything, they decided they were going to try to compete with Subway, and they went down market, and they got absolutely bludgeoned because that wasn't where they lived. They had a great business, and they ruined it because they tried to be something that they're not. If Chipotle tries to go down market, they are going to get wrecked because the customers that like them today will abandon them, and the customers they don't have that they want are going to be able to find cheaper stuff elsewhere because they can't go down market far enough.
It's all well and good, Chuck, but when your stock's down 44% for the year, questions start getting asked.
I think it's an execution problem.
Yeah.
I don't like to, say that everything is, causation, but Brian Niccol left and this company has not done well since then.
Yeah.
Like, it has that feel more than anything else. And again, there are companies that are succeeding in this space and figuring out how to make it work. They are not right now. And this, I'm not saying, like, that whole, restaurant space has questions, but this scale of decline feels more like a Chipotle problem than a restaurant in general problem to me. I don't know. No?
Yeah, I don't know. I'm not sure where I land on it. Obviously, there is a consumer base that is struggling. I'm not sure if it's an execution problem or just a moment-in-time problem.
Let's take a quick break. When we come back, we'll do a little bit of Stack Roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping in the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com. Cushing & Dolan want to help you avoid costly mistakes when it comes to gifting assets to your children. Their brand new guide, Making the Most of Gifting Assets, shares crucial strategies to help you protect your legacy and your family. Many people think gifting is always a good thing, but if it's done the wrong way, it can create real headaches. Even well-intentioned gifts can cause complications if your children are dealing with financial pressure or legal issues like a divorce. The guide also explains how a major gift, like a home or vacation property, could come with hidden tax consequences that may impact your entire estate plan. Before you make any big moves, arm yourself with the facts in this new guide from Cushing & Dolan. Call 866-848-5699 right now to get your copy. That's 866-848-5699. Or request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Turning 70 isn't just another birthday. It's when the clock starts ticking on your retirement withdrawals. At age 73 or at age 75 if you were born in 1960 or later, you need to start withdrawing money from your IRA. They're called required minimum distributions, and missing one can mean big penalties. Taking the RMDs at the wrong time can also spike your tax bill. Even the type of account matters, since your IRA and 401k follow different rules, which could get confusing fast. Our new guide is called Understanding Required Minimum Distributions. It breaks the process down in simple terms so you know when to start, how much to take, and ways to manage the tax impact. Request your copy today by calling 800-393-4001. That's 800-393-4001 or ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and this year's DAV 5K is coming up Saturday, November 8th at Castle Island. The race is sold out, but you can still take part by making a donation to support our great American heroes. Please visit dav5k.boston to make your gift today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Mike, what do you got for me for Stack Roulette today?
I've got potatoes, as I alluded to.
Potatoes.
So tomorrow, the big day in my household for trick-or-treaters, making the rounds. And some guy had a funny idea a few years ago of putting just potatoes along with other options in his bowl for people to grab instead of candy. And it's kind of sparked a phenomenon where people are actually doing this, and kids are finding it funny, and go out there looking to maybe take a potato home instead of big candy bars. And I've got an interesting twist on this that I'm hoping to get your take on. I'm thinking just a giant bowl of mashed potatoes for this Halloween season.
Horrible idea.
Just the kid reaches in and I'm not talking about some dry from the mixed mashed potato. I'm talking about some hand-mixed, buttery mashed potatoes, because I just imagine the look of disappointment on this child's face when they reach in for a candy bar and just come back with a greasy potato-filled hand.
You just hear the flap in their bag.
That's
the potato's funny. Flop. The mashed potato is not.
The mashed potato is cruel. I did have Gem and I
Yes.
for me create an image of a disappointed child reaching in, expecting Halloween candy and getting mashed potatoes instead. And it did a phenomenal job. So I probably won't create this because my wife won't approve.
Not to mention the
but
effort
love
it would
the
take.
idea.
Your mashed potatoes don't take,
Yeah. You
quick,
can whip up mashed potatoes.
They're not that long. They're 45
it depends
minutes.
on the kind of potatoes you're making.
And especially if nobody's eating it, I'm tossing those steamed or boiled potatoes right into the KitchenAid for this, I'm not going to hand mash these things.
That's the true mash.
Yeah, the only way to do it is through... No, I'm a big believer the only way to do it is through the KitchenAid.
Oh, really?
Yeah.
Extra whip.
Oh, yeah, just that
Make 'em
smoothness that you get there.
Fluffy.
Oh, yeah. Just it's as good as it gets.
I don't know. I mean, I'm always a big fan of a good prank, and this seems like a good one to me. No one's going to get harmed from this.
No, and I also don't think that you can improve on it. Like, I was trying to think, is there something else that would be, as funny? and I don't think so, because it's, it's a potato. It's
or just a candy alternative. I'm trying to think of, a cool alternative to candy.
We always give
we
out
throw out so much candy at the end
We
of
always
the day.
give out some garbage little toys just in case kids are allergic to, all sorts of Halloween candy. But I feel bad about that, too, because nobody wants those
toys.
Stupid things. So I think I like the idea of a potato.
How about money? Just hand out money. Just $1.
What is this?
Here's $1.
What's that Adam Sandler movie?
Oh, Big Daddy.
Big Daddy.
Yeah, what else you got?
The watch. Give him the watch.
Just robs him.
What do you have for us, Chuck?
What about a shrimp? What if you got shrimp cocktail?
It depends how cold out it is,
It's Halloween. It's cold.
If it's another 60-degree Halloween, then that shrimp's not going to make it home.
Hey, listen, it's you got this nor'easter coming through and everything, so we'll see. I want to talk a little bit about Comcast earnings. So Comcast
do they have any?
Yes.
Okay.
But they're continuing to lose broadband subscribers, down 104,000. They also lost 257,000 video subscribers.
Not good.
And the stock's down about 4% on this news. It was worse earlier in the day. At one point, they were down north of 10%. But the stock is trying its best to rally here. But I think it's important to look at Comcast and kind of where things have gone from them, because the stock is now valued. It's dropped in value about 50% since its 2021 peak. And especially in the last 2 years, it's just been kind of this consistent slide. And it's tough for me to see, how they reverse these trends given what we're seeing from continued cord cutting. And when we look at the broadband business, other alternatives that have popped up, whether it's more competitive pricing from Verizon, people using satellite-based stuff like Starlink, whatever it might be, there's just some questions as to, what the business looks like in the future. Revenue was down 2.7% year over year. Their free cash flow was better, which just means, hey, you're not spending as much to maintain your network probably. But I don't really know what the future looks like for the company here. It's just what they're doing has not been working for quite some time now.
I'll take the opposite side of that one. I think that we are reaching a bottom for cord cutting because, quite frankly, the alternative, the Fubos and the YouTube TVs of the world have gotten so expensive and have so many networks that they don't offer that more and more people are turning back to the corded option.
So I looked at it just because I was curious when YouTube TV went through with their recent price increase, and I still couldn't get the math to work. And like the biggest problem with Comcast or Verizon, you got to pay for each freaking set-top box.
They're starting to provide options where you don't, but I agree. Like I'm still not switching back, but I'll be honest that it's a giant pain because I don't get TNT and I do get Nessun, and I have to cobble together to watch what I want to watch.
You a big TNT guy?
If I want to watch playoff hockey, I am.
Rizzoli and Isles, yeah.
The what?
Rizzoli and Isles, come on. TNT, Law and Order.
That's a show. Okay.
Yeah.
Got it.
Okay.
Quick break here. We're going to be back in about 24 hours, and we'll see you